Well, the International Monetary Fund has released its latest update to the World Economic Outlook. It expects India to grow at 7.3% in FY19, which is just a tad bit lower than the IMF's April forecast of 7.4%. The report adds that the lower growth rates are on account of the negative effects of higher oil prices. For the world, the IMF has maintained its growth forecast of 3.9% for FY19. It's also warned that escalating trade tensions could derail the global economy. Ritu Singh here with the details. Ritu, what stands out in the IMF's World Economic Outlook?
The IMF has not exactly painted a rosy picture for the global growth or for the Indian economy itself. In fact, in its World Economic Outlook update, IMF says that it has cut India's growth forecast for the current financial year by 10 basis points and sees India growing by 7.3% in FY19 compared to 6.7% in the previous fiscal. It also sees that growth rate rising by a mere 20 basis points to 7.5% by FY20, which is almost 30 basis points lower than what it had projected in its earlier forecast. It says that lower growth reflects negative effects of higher oil prices on the domestic demand for India and the faster than expected monetary policy tightening because of the sharp rise in inflation that we've seen in the past few months. But globally, it has maintained the global growth forecast at 3.9% for 2018 and 19. This compares with, it's just a 10 basis point growth compared to 2017, which was at 3.8%. For advanced economies, growth is projected to increase by 10 basis points from the previous forecast to 2.4% in 2018 and 2.2%, which is a slowdown, by 2019. For emerging market economies, which have been hit by rising oil prices, higher yields in the US dollar appreciation, trade tensions and geopolitical conflicts, emerging markets are seen growing at about 4.9% growth for 2018 and 5.1% for the next year, that is 2019. The risks to global growth, according to IMF at this point, is, the biggest risk is the trade tensions escalating between US and its various trading partners and the repercussion that will have on the growing economy. And therefore, IMF says that going forward, the countries must remember that avoiding protectionist measures do remain essential to preserving global expansion.